Welcome to today's episode of Alpha Wave Finance. It's July 5th, 2025, and we have a seismic lineup of stories that could reshape your money mindset. Right now, markets are reacting fiercely to the end of the tariff truce, a big move in Bitcoin, a surge in tech stocks, pressure on the Fed, shifts in commodities, and news in real estate. We'll break down each headline clearly, show what it means for you, and arm you with the energy to make smart decisions. Stick with me, this isn't just news, it's your daily advantage. First, the US dollar. After a brief bounce last week, it's slipping again as trade risks reemerge today. The dollar index is back down around 97, erasing gains from the stronger jobs report, an echo of earlier uncertainty. That weakness boosts import costs and inflation, but it also makes U.S. exporters shine. As the greenback fades, gold and crypto are finding fresh support. Don't miss how that shift impacts your portfolio. Stocks are alive again this morning. S&P 500 and NASDAQ futures are rising over 0.7%, driven by strong tech momentum and relief that global markets aren't collapsing yet. Investors are saying, okay, we'll stomach some risk, and AI names are leading the charge. Those same names suffered in the tariff panic, but now are powering back, showing how quickly sentiment can shift. If you're playing tech or AI, pay attention. This rebound could carry through summer. But that doesn't mean there isn't danger. Tariff letters are due by July 9th, and investors are watching closely. Even a whisper of a 10-70% tariff on some countries could rattle supply chains. Global markets aren't aligned. Europe and Asia traded lower yesterday while U.S. futures rose. It's a reminder, U.S. optimism doesn't always translate abroad. Risk is real and awareness is your ally. Meanwhile, tech stock strength is real and steady. Nvidia drove earnings expectations higher again thanks to strong AI forecast commentary. Other AI-adjacent plays like AMD, Microsoft, and Salesforce soared in after-hours trading. The market isn't focusing on tariffs, it's focused on profits. But if geopolitical friction accelerates, even tech could slow. For now, it's a rally, but fast strategy is key. Let's turn to Bitcoin. It just surged above $111K after a huge whale moved 10,000 BTC from cold storage. That kind of move speaks volumes. Someone confident enough to hold long-term just made waves. Then price consolidated near 109K as volatility took a breather. Traders say it proves cryptocurrency isn't some fringe asset, it's globally influential capital. If you haven't included crypto in your asset mix yet, this is your wake-up call. Crypto volumes are also reacting to the derivative expiry last week. That explosion of $3 billion in BTC and $600 million in ETH options exited the market quietly, leaving huge open interest support. Now, implied volatility is cooling, suggesting the frenzy might transform into a steady rally. When calm replaces chaos, strong rallies often follow all-time highs. It's technical momentum. Pay close attention. Now, the Federal Reserve angle. Futures at midweek show markets are assessing July rate decisions straight through September. After a hot jobs print, rate cut odds fell to only 25% for July, but still hover near 50% for September and December. Powell speaks this Friday. His tone could tilt everything. If he hints at hold or pivot, equities and bonds will move. Forget guesswork. Watch his words. Commodities are trading quietly. Oil is flat, copper down slightly, and gold up again. That gold rise, small but steady, shows investors still want safety amid uncertainty. With tariffs and Fed tone trending driving risk, gold may outperform. Considering adding a little to your portfolio, this could be the right window. Residential real estate is quiet but strong. Low rates and post-COVID migration trends support suburban markets like Phoenix, Tampa, and Austin. Institutional buyers are still interested in income properties. Mortgage app data shows a slight rebound now that volatility eased. If you're a long-term real estate investor or mortgage borrower, this environment still has opportunity. Clean energy stocks took a pause yesterday, but now are seeing renewed interest. Green projects are still receiving funding through updated federal and state incentives. Utility-scale solar companies are performing well, and hydrogen startups are seeing fresh investor flows. These sectors may be slow-moving, but they're steady, and investment-savvy portfolios should consider them alongside tech. Hedge funds may be rethinking energy. Large players started trimming oil and gas exposure as OPEC Plus appears ready to increase output. That signals a strategy shift from traditional commodity bets to tech, real estate, and nimble high-growth segments. If you're heavily positioned in old-school sectors, it might be time to reallocate, especially if you prefer long-term, stable returns. Bonds remain interesting. Yield volatility continues, but rates stay elevated, meaning income remains appealing. Several analysts believe we've entered a plateau range, around 4.5% for the 10-year. If inflation stabilizes, bonds could deliver steady returns while equities flex. Especially in a mixed environment, bond ladders or quality fixed income make sense. Now, a peek at emerging markets. Countries like Vietnam and Mexico are showing capital inflows as investors look for growth beyond the US and China. The weaker dollar makes these plays more attractive. Asia-Pacific and Latin America equities may offer diversification beyond traditional markets, but the 90-day tariff hangover still looms. Keep tabs on trade policy. Back to crypto. DeFi assets are quieting, but stablecoins remain steady anchors. Protocol TVL is up slightly while daily activity dips. That indicates consolidation among big players. For sophisticated traders, that suggests large wallets repositioning off the radar. A smart investor watches the horizon, not just the headlines. In tech M&A, several mid-cap firms are in talks to merge. AI-driven analytics companies are being eyed by bigger players to solidify positions in enterprise tech. Early rumors involve a possible hedge fund scoop or PE deal. M&A often moves quietly, but when announced, can shift sector sentiment dramatically. If you follow tech, these quiet dynamics matter. Another story. Consumer credit data showing spending in Q2 held firm, even as inflation bites. That suggests pockets of resilience in the broader economy. Credit card balances rose only moderately, meaning consumers may be shifting spending rather than pulling back entirely. That's bullish for sectors dependent on discretionary purchases. It's a reminder, economies are complex. One data point doesn't tell the whole story. Finally, the incoming week is full. Jobless claims, CPI update, Fed speak, and earnings from marquee names like Apple, Google, and Tesla. We're halfway into the summer, but markets aren't resting. Each report has the power to reverse today's moves or accelerate them. As an investor, your edge will come from making sense of this flow and then acting confidently.